Hello everybody and welcome to your Calgary real estate market update for November. This month we're seeing a few mixed signals come out of the data set from the Calgary Real Estate Board, but at the same time we're seeing a couple trends firmly establish themselves that give us a pretty good idea of what the last little bit of the year is going to look like and how 2025 could start off. Okay, so I'm going to dive into all that and let you know what I'm seeing out there. So let's get into it. So last month, the average sale price for a piece of real estate in Calgary is around $597,000. And this month's sales data, we're down again for the fifth consecutive month now. We're decreasing the average sale price in Calgary, and we're sitting just under $593,000 for November. All right. So why is this happening? Well, we've got a lot more inventory on the market compared to where we were at last year. Okay, more new listings coming to market, 22% there, and about 55% more available inventory for buyers to choose from. So this is putting less pressure on pricing because there's a bit more supply and a little bit more selection out there. But in an interesting twist, we've actually had more sales in October than we had in November. And this is not typical for Calgary. Usually you'll see what we saw last year, which is from the summer months, we'll see less and less and less sales as we work our way towards the end of the calendar year. Well, we were seeing the same thing happen here in Calgary for most of the later part of the summer and early fall. But in October, we had a little bit of a pop. So we got about 170 sales more than we had in September. So why could this be happening? Well, we have seen some reductions in the key lending rate. So mortgage interest rates are lower, making it easier for buyers to afford more stuff. But also we've seen reductions in pricing here in Calgary. So those two things could be working in concert and pulling some buyers off the sidelines and get them to come out and buy some real estate. So I'm not ready to say that this is a trend that we need to be watching here, but it is kind of interesting that we're seeing some of these larger macroeconomic effects work their way into our local market here. In terms of are we in a seller's market and the balance of the market? Well, our month's worth of supply is now back in seller's market territory at 2.28%. So this, or 2.28 months worth of supply. This is different than what I reported last month, where for the first time in 3 years, we were actually in balanced market conditions. Okay. Well, because of this pop in sales that we had in October, it's now put us back into seller's market territory, although we're still up from the previous 4 months. If you look at where we were at in August data set at 2.5 months worth of supply compared to September's at 2.53. We're now at 2.28. So still softening here in Calgary and slowing down heading into the latter little bit of this year. I'm not quite ready to say that we're going to stay here, that we're going to shoot up and get way worse than we're at right now. I think we're going to see this kind of balanced sort of feel to it for the next several months. Okay. So what about the price ranges? So if you're shopping and you've got a certain budget in mind, what can you expect the market to feel like in those price ranges? Well, Krebs doesn't give it to us, so I got to go and pull this number or pull these numbers out there myself. But they do show the inventory in these various price ranges that you can see here. And you can see here we got a lot more inventory, but it's in the higher price ranges. Now, this graph is kind of skewed a little bit, and you have to think look a little bit deeper because Krebs has put 3 price brackets into one. They've jammed them in here. This goes from 700 to $1 million. If you look at the other ones, it only covers 100 grand for each one of these little bars here. But at any rate, we are seeing a lot more inventory in the higher price ranges than we have in Calgary. But if you look at the sales, it's kind of following along with that as well. All right. So sales are creeping up and we're building more momentum into the upper ranges of the market. So here's what you can expect the market to be like depending on your budget. All right. If you're in that $300,000 to $400,000 range, it's going to be pretty balanced. If you're between $400,000 to $700,000, you're still in seller's market territory here. Okay. If you're looking for an affordable detached house, you're going to have a lot of competition, and it's not going to be a dramatically different experience for you than it would have been earlier this year. All right. As we work our way above $700,000, it starts to balance out just a little bit. But I'd really love to know the breakdown between 700 and 800, and then 800 to $1 million plus, because when you're above $1 million now, we're very much in buyer's market territory here at about 3.6 months worth of supply. Okay, so you average all that stuff together and you get our 2.28 months worth of supply for November. All right, now here's where you can start to see some of the trends that have established themselves this year that I think are going to carry over into next year. So if you look at the tail end of last year, we were flat with pricing. Then we hit the new year and bam, we took off with our price growth. Several months in a row we were increasing, and then now we've come back down here a little bit. Okay, so this red line on this graph is a function of the difference between the blue and the green bars that you're going to see on here. Okay, whereas if you have more sales than you have inventory, it's going to push prices up. There's just less supply for the amount of demand that's there. But that narrative changed as we hit the midsummer, and now we've got a lot more inventory than we have sales that are happening right now. And this is a key difference from last year and how it ended compared to what we look like this year. Okay, if you look at last year, we had around 3,000 available listings on the market and similar numbers of sales to where we're at right now. Okay, if you look at October of this year, we have way more than that, almost 2.5 months more inventory than we had available in October of last year. Okay, so we're going to be turning the corner here with a whole pile more inventory than we did going from 2023 to 2024. This means to me that we're not going to see the same hot start that we had last year, because we're not going to have as tight a market. We're not going to have such a low amount of supply relative to the amount of people that want to buy out there. Okay, so unless this change in interest rate results in a pile more sales to draw down some of this inventory, I'm not so sure we're going to see our market take off to the same extent that we did last year. One of the things I do think is going to carry over, though, is that the pricing gains that we're seeing at the upper end is likely to stay. If you look at the red bar graph here, this is sales above $700,000, considerably more than we've seen in previous years, and the $1 million price bracket as well is working its way up. So that to me tells me that we're going to see more action these higher price points heading into next year. Okay, I don't think we're going to give up at that top end. I think that's going to maintain its course moving forward. All right, let's jump into the news out there right now, see what's relevant for us. So a bit of a slower month with news, but we are seeing some more fees for buyers out there, okay? So just as we're seeing more affordable interest rates at the federal level that are directing that, the Alberta government has now come out and said, okay, we're going to charge you more when you want to change the ownership and register a new owner on title, or if you want to register a new mortgage, we're going to charge you more money for that than we were last year, by quite a bit, about 2.5 times more than it would have been before this change took place. Okay, so this is passing more costs on to buyers. This just shows up on your lawyer statement when you buy something. All the fees and registrations are on there. Just one of those additional charges that are there that most buyers are not going to feel, because they're only buying a property once every 4 to 7 years or something like that. So not going to necessarily be impacting the consumer a lot, but those of us in the industry, when we've gone to explain closing costs, we now have to talk around these higher fees that are out there that are going to make things a little bit less affordable for buyers. Not a big deal, but still something to keep in mind. We're also seeing interest rate reductions, but not enough, according to industry experts that are out there. Okay, so we want to see even further reductions in the key lending rate to make it easier for buyers to get into the market. And I think this is something that we're likely to see come true with further decreases in the lending rate, particularly as we approach an election sometime next year. Okay, so interest rates are coming down. But the big change for those of you that are looking out a little farther, okay, so maybe you're not in the market right now. Maybe you might not even be in the market to move next year. But if you're looking beyond that, this is something that's going to impact the market a few years from now. It's a reduction in immigration. So this has been called for a long time here now, that we overdid it, that the Liberal government overdid it by a really ambitious immigration plan. Well, they're rolling that back now by about 21%, okay? And this is going to happen not only in 2025, but in 2026 as well. They're just putting a bit of a pause on the immigration growth, okay? So this is going to mean fewer people coming into the country that need a roof over their heads, so a little bit less demand for real estate is going to occur, which is going to mean a little bit less pressure on those people that are in the country that are looking to buy a piece of real estate. Okay, so it's going to mean that a few years from now, there's just less buyers that are going to be out there. So if you're looking into what that could mean for you in your market, you should get in touch with us so we can tell you about what the prices are, and you can start to watch the transactions that are happening in your market area to see what this might mean for your strategy with your real estate. So thanks very much for watching, guys. I hope you've enjoyed it. We will see you guys again next month for our last one of the year. Thanks very much for watching. I'll see you guys next video.